So we're just going to build on the recommendations or the predictions that I came up with at the beginning of the year. These are my 2021 predictions. So why don't we go ahead and track all this stuff in Excel? It's usually the easiest way to do this kind of stuff. This is all hypothetical. We'll just, just call this 2021 prediction. And let's say that we're going to use, let's just build something down here as like total, let's call it $1 million. And put here like percentage of total. And here we'll just call it security name. And maybe bold that. All right. All right. So let's start from the top here. So what did I say? I said Bitcoin goes above 50,000. So what I like to do is, between the my call on inflation expectation rising at the end of the year. Probably the riskiest is the Bitcoin. Let's go here and find out where Bitcoin's trading right now. Oops. Let's see, BT price. There it is. 33,546.20. Let's see. 33,526.20. Let's apply that all here. We'll call it share price. I'm gonna buy a bunch of shares. Number of shares. All right, so let's see. We want to do this as a percentage of all of this, so just divide it by this guy. Fortunately, this is a Mac, so I'm not exactly the most proficient on this. All right. Yeah, all right, that's good enough. All right, so we want to try to keep this stuff, you know what, I'm going to add another here. Number of shares, share price, call this total allocation. Allocation amount. Shorten that up a little bit, make it a little bit easier to follow, not taking as much space. All right, so 3.35%. So, we really want to try to keep the stuff that we think is a little bit more volatile on the shorter end of the percentages of the total amount. So I would just really try to keep this under that 5%. So I'll buy one of these, take this, and we'll change the total allocated amount. I think, okay, that's fine. We'll just work with that. All right, so we'll just do one share of that. We'll do GLD. Reason why I use GLD is because it's got a really low, you can see under Yahoo Finance, it's got a really low, expense and it's the most liquid out there in terms of trading. So you can see here, yeah, expense ratio 0.4%. I mean, it's not the best. I mean, you can get a lot better if you're doing like index trading with Vanguard. You know, Vanguard's got really, really low expense ratios, but this isn't that bad. So just trying to gain exposure. So that's 178.36. 178.36. Let's try to maybe, yeah, there we go. All right. So take the allocated amounts, bring it down there. And this will just be the sum, right? Yeah, there we go. All right, so we want to get this to $1 million. So far we're at 3%. Let's say we want to do maybe, 100 shares. All right, so kind of make this a little bit more even between gold and Bitcoin. I actually feel stronger about Bitcoin. So, between the two, you've got about, 5% of your total portfolio, your hypothetical $1 million portfolio. And so we're going to add as, the expectation here is that I think my number 6 prediction was China's economy is going to continue to grow. So one of the better ETFs out there to trade is FXI. That follows large cap China. And again, here you can see here, for all the large caps in China, you can see the number of holdings here. Most of the stuff is in stocks, and it's fairly well distributed among the ones that you would expect would be really strong performers for China. So you got financial services, cyclicals, communication services, energy, technology is actually surprisingly small. But this kind of falls in line with where I think, earnings, the PE ratio right now is extremely high for U.S. equities. I mean, you're talking, probably more for the S&P, and that, you can see right here, I have a graph up here, 37.85. So that's a really, really, really high watermark. I mean, a lot of people are putting this up against what happened in the crash of the dot-com bubble. You can see the dot-com is at 40, was a little bit above 40, and then you saw the big crash. So, a lot of people think that, you want to be somewhere in the average of the 10 to 20. If it's over 20, it's considered elevated. Of course, this is all being caused by the pandemic. So you would think that the earnings would start to grow more quickly as the pandemic starts to subside. So hopefully earnings over time, over the year, or over the next, call it 2 to 3 years, the earnings side should bring this price down as, all else being equal. But you can see here what's really nice is that price earnings for China is actually fairly decent for this index at 9.69. That's right where you want to, right where you want to see it, and right where you think there's going to be additional growth. So we're going to add this to our total portfolio. And this is at 46.43. All right, this is where we really start to ramp things up a bit. So 4.64, let's do about 2,500 shares there. So fairly decent size there. We're still not neglecting the S&P 500. So again here, This is again one of the most liquid traded ETFs out there for the S&P, and what also is a nice thing about this one is that, as you can see here, the expense ratio, the amount of fees that you have to pay to actually, be able to own this ETF is extremely low, 0.09%. So we're going to take a considerable piece there. So that is now trading at 373.88. All right. So that will make up a substantial amount for now of our, oops, one too many zeros, total portfolio. That looks about right. All right, so we're up to 616 right now. And then the other portion of what I was talking about, so we got the gold, we got the Bitcoin, and then the other inflationary hedge here is treasuries, in particular TIPS. You can see here, TIP, yeah, there it is. So TIP bonds are right now at 127.65, yielding something here, 1.23%. So again, very low expense ratio. TIP, again, this is one of the more liquid out there. And iShares is one of the more popular ETF providers out there as well. So, we're going to go with this one. We're going to keep this fairly low, sort of in line with our other hedges, in terms of the US dollar really starting to lose its value. So that's the reason why we have that exposure on gold and Bitcoin. And then the tip here, we're going to just, let's see, take a good sizable portion here. This is one of the safest positions that we're going to have, 127.65. 127.65. So it's actually not bad. Yeah, that seems a little better. All right, so where are we at right now? So we're at 73%, $730,000. And so what the other portion that I was going to put in here was going to be some individual names. I really don't like choosing in individual names, but I don't mind it so much to have that speculation. Again, like, what we're doing here is more investing. I really dislike when people try to speculate and try to be traders. I think it's a lot better to be an investor rather than a trader, because well, not only that it takes a lot of time, but if you actually looked over a large enough portion of a period of time, what you would see is that a trader really doesn't make all that much better choices than somebody that's an investor. And what normally happens is that, when you start to trade a little bit too much on too high of a frequency, you tend to second guess yourself a lot more, and you start to make a lot of mistakes, and those mistakes start to build up. And so what I've seen from a lot of traders, especially day traders, they'll have really good days, really bad days, and everything kind of equals out. So at the end of the year, if they're even, that's actually pretty good. But for the most part, most traders lose money, and it's probably most of the reasons why is because it's psychological, because people just simply want to just go out, and just trade a bunch, and you just kind of get into that trading mode where you tend to just follow all these graphs and stuff like that. And I never really felt comfortable telling people that they should believe in some sort of graphology or something like that. A lot of people try to spew that kind of stuff on people, but from what I've seen historically, it never works. And again, I think it's just a waste of time. So I think being an investor, looking out 2-3 months, I think is fine for speculation purposes. And then, when it comes to, long-term macro events, I think it's better to think more in that, call it the 2 to 5 year, 5 to 10 year type of period. All right, so let's go back to this portfolio. And so we got our tips. And so the single names and single, again, speculative names that we're going to be holding for most of the year. Obviously, if something changes, exogenous type of events, then we're obviously going to make adjustments to this portfolio. But for now, this is what we're going to deal with, or this is what we're going to do and track for the year. So some of the names that we really like, Marriott Vacations. I think it's back, yeah. So Marriott Vacations, 137.22. Okay. Oops. All right, so we're gonna just take small pieces here. Speculation. Another name that we like is, I think it's Wyndham. There it is, Wyndham Destinations. These are timeshares. These are really good ways to play that. The last prediction that I had with hotels and, non-luxury hotels. So these brand names should do fairly well in a recovery. So WYND 4486. All right. Let's do a little bit more here. Maybe 450. Yeah. There we go. And let's see. And then the last one we were thinking was extended stay. Another hotel name out there. Nope, not Starbucks. There we go. Extended stay. These are for those people that stay in the hotels for weeks on end. 1481. Y 1481. All right, so we're gonna have to buy a lot of these. Maybe 1,400 shares. All right, that sounds pretty good. All right, and then the last thing we're gonna do is go after some yield. And we think there's gonna be some rotation in from the tech as the recovery starts to happen. So let's see, 44.64. Okay, so this is the Dow, the dogs of the Dow, and these are, fairly high dividends that you're going to get on the Dow names. So you can see here that the yield is very high, 4.33%, relative to treasuries, which probably, I think, the 10 years, again, I think I mentioned this last time, was right around that 1% level. So let's fill this gap out. 44.64. 44.64. All right. Let's do S-Dog. All right, and then that should do it. And then the rest is cash for now, just in case things start to go a little bit south after the Georgia runoff. My prediction there was pretty much one up, one down. I thought basically one for the Democrats, one for the Republicans. That's a lot of people think that it's just both gonna be Republicans. I wouldn't doubt that to be the case. Easily could see that happening. But also I actually could see, both of them flipping to Democrats. And so that would be a very big event. I think that would have a pretty large effect on equities. So we're gonna just kind of hold off at around 800,000 and leave the rest in cash. So let's take this. Oh, that's my circular. Let's see. Equal, oh yeah. Duh. All right. Let's go here. This minus that guy. Oh, did not like that. Oh, I gotta get rid of this. Let's just put this in a different, let's just keep the value. Make this ridiculously easy. There we go. All right. Oops. All right, so that is our portfolio. And we'll catch up and see how this does over time. All right, thanks guys.